Hello, and welcome to our channel Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing and crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and are looking for smart money management options, then we are fortunate to have found each other. What comes to your mind when you hear the term investment? Something only wealthier persons can have access to. Well, probably that's not the case. Any person can invest irrespective of age, career, or income. However, the investment plan might differ depending on the wealth. Investing in revenue-generating assets is the secret to building your wealth. You can make money with the money you already own. It's easy to invest in income-generating assets because you don't have to make money. In today's video, we will discuss the 7 most valuable financial assets you will ever have. So, continue watching the video till the end to know about the most valuable financial assets. First, let's understand what exactly a financial asset is, and to put it into the simplest words. Financial assets are liquid assets that get their value from a contractual claim or ownership on an underlying asset. Examples of financial assets are stock equity or bank deposits. Valuable financial support ensures good cash flow, recurrent revenue, or constant income. Every financial asset has its requirements. Some need a higher amount of investment to get started, while others require an average amount for investment maintenance. Investing in a valuable financial asset is the same as making money while sleeping. Anyone can increase their income streams by proper strategies and planning while investing. Let's have a look at the most valuable financial assets you will ever have. Number 1. High-yield savings accounts. Online savings accounts are much better than a traditional bank savings account. Traditional bank savings accounts don't offer you higher return rates than online savings accounts do. Cash management accounts are a cross between savings and a checking account. They may pay similar interest rates to savings accounts, but they are usually offered by brokerage firms and may include debit cards or checks. None other option than savings accounts can be best for short-term savings. Sometimes you don't need money very often. You need it occasionally, just like in case of emergency or for the vocational fund. Savings accounts are best for that. So, online saving accounts offer flexibility with higher interest rates. Robo-advisors and investment companies are the best places to open savings accounts. Online accounts always offer higher rates with maximum flexibility compared to traditional accounts. Number 2. Online businesses. It's better to move slowly but efficiently. Online businesses are profitable ways to invest your time and money. Starting your own business online is the most popular way of being independent. Online businesses let you be the boss of your setup. You are free to set your working hours and holidays. You can handle them at any time from anywhere. Although online businesses aren't easy to run, you have to devote your whole struggle to running your business. But the income made through it will be more than the time and efforts devoted. Online businesses don't grow up overnight. It takes time to create its place among thousands of other online companies. A time span of approximately 2 years might be needed for the successful running of your online business. You can shorten the time taken for its success by making efforts and struggling to progress. Blogs, e-commerce storefronts on platforms like BigCommerce or Shopify, and even selling on eBay and Amazon are examples of online businesses. You'll be able to invest less money and time needed to manage the business while still generating cash over time. You can finally sell your online asset or keep it as a side revenue source. Number 3. Stocks and equities. Stock is a valuable income-generating financial asset. They may provide a steady stream of income to help you accomplish your retirement objectives. Stocks are the best way to make and build wealth for your future. It would not be wrong to say that stocks are the king of all assets. The profit made through stocks isn't just exemplary in one country. If we go through the historical records, we will get to know that stocks have never been disappointed when it comes to providing continuous and long-term returns. Stocks are the best assets for investment because you don't have to do any upcoming maintenance on your side. You have to invest in a business and own it. Someone else will manage the company on your behalf, but obviously you will get the rewards. The procedure for buying stocks is simple. You have to select between individual stocks or a fund. If you purchase a fund, you will have access to broader stock. Ideas of buying stocks differ. Experts disagree on the size, value, and price movements of equities. Dividends are the profits you receive as a shareholder in a company. Some investors choose stocks that give out regular dividends. So, if you have a decent part in business, let's say you have a 5% of a company that provides dividends of about $1 million, you will get $50,000 from that. Isn't it great? Companies in various industries pay dividends, including financial services, healthcare, oil, gas, and utilities. Number 4. Bonds. Stocks are something of higher thoughts. The world of bonds is a little bit calmer. The loan that an investor lends to the borrower for a decided period is termed a bond. The investor gives a loan to the borrower with some terms and conditions. Before paying the total amount, the borrower pays periodic payments, such as coupons, to the investor. Whether it's a business, individual, or the government can all be borrowers. When investors talk about bonds, they usually mean bonds or U.S. Treasury bonds, in which the U.S. government plays the role of a borrower. Other than the U.S. Treasury bonds, the option of purchasing foreign government bonds, municipal bonds, and corporate bonds are also available. These bonds pay a greater interest rate than U.S. Treasury bonds, but they are risky investments. U.S. Treasury bonds are safe because the U.S. government can print any dollar it owes at its will. Anybody who borrows from them gets a virtual guarantee that they can get the money back. No other foreign government, local government, or corporation provides this facility. You can own bonds easily. You can purchase individual bonds, but prefer purchasing these bonds by using the bond funds since it is easier. Aside from the types of bonds, it is recommended to purchase them. They may add value to your portfolio in addition to generating growth. Number 5. Vacation properties or investment. Aside from bonds and stocks, vacation properties or investment is known as an income-making asset. Having an investment property may be beneficial because it provides a place where you can relax and can get some extra cash. If you plan well and manage the property, you will also get help from the people who will pay the mortgage, and meanwhile, you will have the advantage of increasing your property's long-term price. Furthermore, if you could borrow money to purchase the home, your return would be slightly more significant because of the increased leverage. If you're thinking it's not true or seems like a fairy tale, well, it is true. There are several benefits of having a vacation rental because it also needs significantly more effort than other assets that can be set and forgotten. The vacation investment property requires the ability to interact with people, offer continuous maintenance, and much more. All of this while dealing with the extra burden of having an additional liability on your balance sheet. If you got everything on track and going well, this can be a delightful experience, especially if you borrowed a big chunk of money to finance the purchase. However, if things go wrong, as in 2020 due to the pandemic, things can be worse. While profits on these can be far better than those on equities and bonds, they also need significantly more labor to achieve. Number 6. Farmland. In addition to real estate, farmland is another fantastic income-producing asset that has been an essential source for creating wealth. Low correlation with equities and bonds is the biggest reason behind investing in farmland. Farm income is not related to what happens in the financial market. Furthermore, farmland is less volatile than equities and provides inflation protection. Unlike individual stocks and bonds, farmland is not likely to go to zero due to its asymmetric risk profile. However, climate changes may affect it in the upcoming years. Farmland is expected to return in the high single digits according to Jay Girotto of Capital Allocators podcast, with around half of the return coming from the increase in land prices and also in the agricultural yields. While purchasing individual property is a significant investment, investors can consider the most popular option to buy farmland by a publicly listed REIT or a crowdsourcing option such as Farm Funder or Farm Together. This option has the advantage of giving you more significant influence over the farming assets that you have invested in. The disadvantage is that crowdsourcing solutions like Farm Funder and Farm Together are only available to authorized investors. Moreover, the costs charged by these crowdsourcing platforms may be larger than those set by other investments. Number 7. P2P Lending. Peer-to-peer or P2P lending, like bonds, is a fixed income investment in which you lend your money to others who will repay you over time. Individuals are generally not as creditworthy as enterprises or governments. Hence, these loans' interest rates are usually substantially higher, but the high interest rates do not always imply better returns. The rationale for this is that higher interest loans are more risky and very much likely to default than lower interest loans. The returns displayed in the far right column are obtained when these increased interest rates are balanced against the predicted rise in borrowers' defaults over time. Also, keep in mind that these returns apply to all loans in a particular credit grade. So, if you lend to some people, the consequences can be somewhat variable. That's why platforms such as Lending Club make it pretty easy to diversify through lending to hundreds of people at a time. The main disadvantages of P2P lending are the lower returns if we compare it to the other risk assets and the hidden dangers that might be included inside these assets. But they are only hidden hazards since there isn't much historical evidence on P2P lending. This implies that, under unusual circumstances, these loans can go unpredictable. So, these are the most valuable financial assets that you can consider. Also, there are several possibilities to diversify your holdings and increase your income. Whatever combination of income-producing assets you choose, keep in mind that there are numerous ways to succeed when it comes to investing. It's not about choosing the greatest assets in this game, but rather the ones that will work best for you and your scenario. There is a possibility that two individuals may have quite different investing methods, and both might be correct. That being said, we wish you the best of luck on your financial path. That's pretty much it for the video. Hope you enjoyed it. Don't forget to share your thoughts with us in the comments section, and thanks a lot for watching. We will see you in the next video. Please subscribe to the channel, like the video, and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya till the next time.